Well, folks, buckle up because today's deep dive, we are taking a look at a day of market craziness. Like, wow, we haven't seen anything like this in a while.
Yeah.
So it is March 3rd, 2025, and it feels like the entire world of finance is kind of spinning after all these huge announcements, and we
Yeah.
saw shockwaves through stocks, even crypto.
Definitely.
But you know what? By sticking with us through this deep dive, I
Mhm.
promise that you will not only understand, like, what the heck happened, but why it should matter to you and, I mean, to your own money, your own wallet.
That's right. Today really drives home the point that everything in the global economy is tied together. I mean, one decision in one place, it can cause a chain reaction everywhere and in every market you can think of.
I mean, yeah, absolutely. And for today's craziness, I think it all starts with what President Trump dropped on everybody,
Hmm.
a 25% tariff on anything and everything coming in from Canada and Mexico. And get this, starting tomorrow, March 4th.
That's not just some small tweak. That is a huge leap in the trade war, and markets absolutely hate uncertainty.
Right.
If you look back in history, I mean, think about things like the Smoot-Hawley Tariff Act back in the 1930s, or even just the trade wars we've seen recently. Anytime you get protectionist moves like this, they tend to blow up in everyone's faces. You end up with consumers paying more, supply chains get completely messed up, and the whole economy slows down. It's not good.
And the thing is, right, this isn't just like some theory in a textbook. This is real life stuff that's going to hit businesses and people like you and me right in the wallet.
Right.
Think about it like, let's say you're a business owner and you rely on stuff from Mexico or Canada. Suddenly your costs just went through the roof. And for regular people like us, well, everything from groceries to cars gets more expensive, and that's just the tip of the iceberg.
Yeah, absolutely. And you saw this play out in the stock market today. I mean, it was brutal.
Oh, yeah.
The
Right.
S&P 500, that tracks 500 of the biggest companies in the US, it fell 1.71%. The Dow Jones, another big one, that's 30 major companies that dropped 1.42%. And the Nasdaq, oh boy, that one really took a beating, down 2.13%.
Ouch.
And those numbers, they really show you how much confidence investors have or don't have right now. When things look shaky, they start selling off their stocks, and that pushes prices down.
So even if you're not like day trading or anything, right, these drops, they can still hit your 401k, your retirement funds, anything tied to the market.
It's a good reminder that we're all part of this big global financial system, whether we realize it or not.
Absolutely. And speaking of a wild ride, did you see what happened with Bitcoin today?
Oh my goodness, where do we even start with that one?
Right? I mean, first it shoots up like a rocket after President Trump says he's going to put in this U.S. strategic crypto reserve.
Yeah.
What did you think when you heard that?
Well, at first, it sounds like a good thing, right? A government backing Bitcoin could give it some real legitimacy, but then it also makes you wonder, how much should governments be messing around in crypto, especially something like Bitcoin that's supposed to be all about decentralization?
Yeah, it's a head scratcher for sure. But anyway, that little surge didn't last long.
Yeah.
Bitcoin ended up tanking like, what, 9.47% down to around 84,138%. What the heck happened?
Well, it shows you just how volatile crypto can be, especially Bitcoin. People talk about it like it's a safe haven asset, but the truth is it reacts to global events and emotions just like anything else. That whole tariff announcement basically scared everyone into running for the exits. Even the idea of the government backing Bitcoin couldn't stop that panic.
It's crazy. So while all this is going on in the U.S., what about the rest of the world? How are they taking all this?
Well, it's a real mixed bag in Asia. Markets basically followed what happened here in the U.S. So the Nikkei in Japan and the Hang Seng in Hong Kong both went down. That makes sense. Everyone's nervous.
Right.
But over in Europe, the big indices like the FTSE 100 in the UK and the DAX in Germany, those actually went up.
Wait a minute, that doesn't seem right. I mean, with all the craziness going on, why would they be going up?
It looks like Europe is reacting to things that are happening over there. Inflation worries seem to be calming down, and there's this expectation that defense spending is going to go up because of, well, recent events. All that's making investors feel more confident about Europe, even with the U.S. tariff situation.
It just goes to show you that the global economy is a seriously complicated web, and one event can set off all kinds of reactions in different places.
Absolutely.
So, with all this chaos going on, there's this one little economic indicator that I'm really curious about. Did you see the ISM Manufacturing Index? It came in at 50.3, which, yeah, it's still gross, but it's a big slowdown.
That's the ISM Manufacturing Index. It's a really important number because it tells you how busy factories are across the U.S. It's based on surveys they do with purchasing managers all over the country.
Okay.
A number above 50 means things are expanding. Below 50 means they're shrinking. So 50.3, it's still on the right side, but barely. That could be a sign that manufacturing is starting to weaken, and if that happens, the whole economy could slow down.
So while everyone's freaking out about tariffs and stock market and Bitcoin, this little change in the IFM index could be a sign of bigger problems brewing.
Absolutely. It's like, trying to figure out if it's going to rain, you got to look at more than just the temperature. You got to check the wind, the clouds, everything. Same thing with the economy. One number doesn't tell the whole story.
So wow, we've covered a lot today. Tariffs, tanking stocks, Bitcoin going bonkers, different reactions around the world, and this little hint that the economy might be slowing down. It's a lot to take in.
Yeah, it's like we're looking at a snapshot of this crazy moment in time. And remember, markets are always changing what we talked about today. It's just one frame in a much bigger movie.
That's a great way to put it.
Staying informed, really understanding what's driving things, and always looking for deeper insights. That's how you can handle the crazy world of finance.
I totally agree. And as we wrap up this deep dive, I want to leave you with a question to think about. How do you think all of this is going to change the world in the long run? I mean, are we going to see countries pulling back from globalization? Our alliance is going to shift?
Yeah.
Did all this push countries to become more self-reliant and focus even harder on technology? Those are just some things to consider as you keep learning about this ever-changing world.
It's a fascinating time to be following this stuff, that's for sure.
Absolutely. All right, that's it for today's Deep Dive. Thanks for joining us. We'll see you next time.
See you later.